Gold is having its moment this year alone. As of recording right now, the spot price of gold has gone from $26.39 per ounce at the start of the year, peaking to about $4,300 to $4,400 in mid-October, and has now settled. Around the $4,000 range, it's up 53% year to date, which means that gold has performed better than Bitcoin, Apple stock, and even outperforming Nvidia stock. I know that's hard to imagine since this is gold's biggest year since 1979. I wanted to examine the several reasons why I think gold is performing the way it has been this year and explain where I think the price of gold is going for the near-term future. Let's first get into a little bit of background what happened in gold's previous breakout year, which was 46 years ago in 1979. Back then, gold rose from $230 an ounce in January of 1979 to a staggering $855 an ounce just merely 12 months later. That's a 271% increase in just 1 year, which shatters how well it's doing this year according to Douglas Trinder, a precious metals analyst at Jack Hunt. He writes that the gold price spike of 1979 to 1980 is thought by many to be a classic reaction to high interest rate, high inflation rate. During the latter stages of the Jimmy Carter presidential tenure, it became apparent that Ronald Reagan and his conservative fiscal policies would assume the presidency. In 1981, inflation fears eased, resulting in gold's price regression that definitely explained some of the run-up, and according to the gold chart, the price of gold was trading back below $300 by May 1982, which was just 2 years later even. Though inflation still at that time remained relatively high, that makes me think that the 1979 spike was largely driven by speculation and panic rather than fundamental values. If it were purely because of inflation-related reasons, the price of gold, you would think, would just decline more gradually as inflation eases. There was a lot to panic about back in 1979. There seemed to be a loss of faith in the Carter administration, and there were fears that the economic system was breaking down. The crazy high inflation numbers of around 13% and high unemployment around 75% really contributed to that fact. Adding to all of this was geopolitical instability with the Iranian hostage crisis and the Soviet invasion of Afghanistan. From what I just told you, history might be repeating itself. The same forces that drove gold's 271% surge in 1979, which was economic uncertainty, geopolitical chaos, and loss of confidence. These are all showing up again in 2025. Let's break down some of the reasons why I think gold is surging right now. Starting with number one is gold's relationship to the US dollar. These two typically have what's called an inverse relationship. That means when the US dollar goes up, typically gold prices go down, and vice versa. That's because gold is priced in dollars globally. So let's say that the value of the US dollar actually goes down relative to other currencies. Gold's price will tend to go up. Now, this Morgan Stanley article sums it up pretty well, and I read, quote, that the value of the US dollar against other currencies dropped about 11% in the first half of this year, biggest decline in more than 50 years. Ending a 15-year bull cycle of the US dollar. You can see this occur on the US dollar index graph. This is the benchmark for the dollar's international value, and you can see it is falling this year. Morgan Stanley research estimates that the US currency could lose another 10% by the end of 2026, and because of these items, Morgan Stanley notes that, quote, foreign investors have been adding hedges to their exposure to US assets, which will likely weaken the US dollar, and so this kind of makes sense. When the US dollar starts to lose its value, investors like to look for alternative investment sources, and typically one that they like is, well, gold. While this may not be the exact main contributing reason why gold is surging, it's definitely one of the factors. Another key factor that complicates things is reason number two today, which is inflation. Back in 1979, one of the assumed reasons why gold spiked was because inflation was running so hot, upwards of 13 to 15%. Gold is conventionally seen as an inflation hedge because it has a limited supply, so as the dollar loses value to inflation, it will take more dollars to buy the same amount of gold, or that's at least what a lot of people tend to think. But what's more fascinating is that if inflation is simply just moderate, gold prices actually stagnate or they fall. The decade of the 90s is a perfect demonstration of this. The price of gold found a comfortable range of around $300 to $375. It fluctuated at this level for basically the entire decade, and inflation rates in the 90s, they started at around 55%, and by the end of the decade it was around 35%, also between 2000 and 2000. 9 when inflation was quite moderate at 25% per year. Gold prices actually performed better, so what that means is that while inflation is going up and gold is marketed as an inflation hedge, it doesn't always mean that just gold will go up in value because there is inflation. So what that leads me to believe is that inflation is definitely a factor, but it's not the exact factor that's driving up the price of gold. Instead, there are other factors, such as what we expect the Federal Reserve to do with interest rates, as well as geopolitical uncertainty, and central bank policies that could have a stronger weight when it comes to the price of gold. So let's actually talk about central bank policies. This is reason number 3 why gold prices could be surging this year: central bank demand, according to a European central bank study. Central banks now hold 36,000 tons of gold, hoovering huge volumes since the post-pandemic inflation spike and Russia's invasion of Ukraine in 2022. They have increased their holdings by more than 1,000 metric tons. In each of the last 3 years, which is a record pace. This following chart right here illustrates that foreign banks for the first time since 1996 are holding more of a percentage of gold than treasuries as a percentage of their international reserves. Currently, central banks own 20% of all the gold ever mined, and gold purchases have increased a lot since 2022. China is a huge reason for this. As well, their central bank recently had extended its gold buying streak for 11 consecutive months. Now 5th in the world of the top 15 gold reserves, Torsten Slok, chief economist for Global Management, said gold stock level in China has soared throughout 2025, and Bloomberg data shows that household demand for gold ETFs is also surging. This indicates that far beyond whatever the People's Bank of China is doing, Chinese households are also driving significant activity. You can see this demand for physical gold both on the central bank side as well as the retail side. In these countries like China, India, and other Asia, the demand there is higher than the Americas and the rest of the world. Central banks want gold because they want to diversify away from the US dollar. In 2015, the US dollar made up 66% of foreign central bank reserves, but as of 2025, that is now 58%. So the trend is clearly showing that many of these banks, while they still carry US dollars as the dominant reserve currency, they might be hedging a little bit by buying gold. Gold also doesn't really add any default risks. It's not like a government can default on the debt of gold. They just have the asset itself. The 4th reason why gold prices are surging this year can be attributed to geopolitical risk and also global uncertainty. This is one of the main factors, I think, that actually drives up the price of gold, because panic and fear generally bring up the price of gold because institutional investors get scared of what's going to happen to the markets. And then they want a hard asset to own right now. In 2025, there's no shortage of things to worry about. We've got ongoing conflicts in the Middle East and Ukraine. There are rising tensions between the US and China over trade, as well as Taiwan, and we're seeing political instability in major economies. On top of that, we've had a government shutdown, debt levels reaching record highs, money being printed, and just uncertainty all around the global economy. A Fortune article notes that gold's 50% jump in 2025 marked a seminal moment. It crossed the $4,000 an ounce threshold after President Donald Trump enacted a 100% tariff on China. As the dollar depreciates and US stocks slump, gold shines brighter as a safe asset when fear and instability hits. A lot of investors, institutions, and retail like to turn to gold. And according to Warren Buffett, with an asset like gold, for example, basically gold is a way of going along, which means that you are buying something with the expectation it will increase going along on fear. It's been a pretty good way of going along on fear from time to time, but you really have to hope people become more afraid in the year or 2 years than they are right now. Historical analysis shows that during periods of heightened geopolitical uncertainty, gold has delivered average weekly returns of approximately 16%, while equity markets often experience simultaneous declines. Now, those are several macro reasons why gold is up. What could happen in the next few months and into 2026, what we should really look for are the following 4 things. First is the Fed policy. If they start to cut rates aggressively due to recession fears, gold could keep going higher because rate cuts are generally bullish for gold. Second is the dollar index. We want to keep an eye on that. If the dollar all of a sudden strengthens, gold might not continue its run because banks and investors are more confident with the dollar. Third, We should keep an eye on the geopolitical landscape that we are in if we see trade wars cool down, or if we see tensions in the Middle East or Ukraine to escalate, and that could be a good thing for the world in general, but also probably bad for gold prices though. Last, if retail demand starts to go up more than its 25-to-1 ratio, that could be a sign that gold surges further. Otherwise, I think we could be in for some gold prices to consolidate and move downwards. You also have to remember, if you look at the gold charts, there were periods of time when basically gold returned flat or returned negatively over a period of 10 to 20 years. For example, you could have bought an ounce of gold for $1,788 in February of 2012, and it wouldn't have even seen a return until June of 2020. So what do you think? Let me know if you are buying gold, and if you think we're in a sustainable bull market, or if this is just a repeat of 1979 all over again. If you found this video helpful, welcome to subscribe. Or if you have other insights about gold, feel free to share them in the comments section. See you next time.